For most people, they're going to get wiped out because they went to frickin' school and they listened to Marxists telling them that paying taxes is good and you should get out of debt because debt is bad. But at Rich Dad, debt is good because it's tax-free, right, Tom?
You either better get dedicated to your education and coaching and all that, or get out, get a 401k, buy, hold, and pray. Especially today in this insane world, and it is insane, that you better have more education, not less. And the worst thing to do is do nothing because you're confused. You make up your mind either way, either in or you're out. Well, what I mean by in or out, are you in education or are you out of it? And the reason for that is in every investment, there's the macro and the micro. You can't have macro without micro. We can't have micro without macro. The other reason you need more education, not less, either in or you're out, is because real estate is illiquid. And it's not like a stock or a bond or a mutual fund or a 401k. And this is deja vu all over again. This is 2000 and 2008 all over again. And not to confuse people, but there's a thing called the repo market and reverse repo market. And those things are coming apart at the seams. Now, most people will say, oh, good, I'm going to stay out of real estate, when it's really the best time to get into real estate, but you better be educated. So we have a lot of stupid people in the market. That's bad news for stupid people, but good news for smart people. Because, in 2008, Kim and I made more money in 2008 as the market crashed. It crashed and it gave the best real estate in the world went on sale. But the average person was saying, oh, I don't want to fix toilets. I said, because you're an idiot. I mean, Jesus, they're giving this stuff away. They were like Neiman Marcus put in, Gucci on sale, and all the idiots run away from it. But the reason we do this, and we do this with Rich Dad's world, is you need more education, not less, but also who do you take education from? The big reason why real estate is more crucial than stupid 401k investors is because real estate is illiquid. You buy it, you own it. If it's bad, you're gonna go down with it. And if it's good, you look like the second coming of Jesus or something. You look like the genius. So right now, Kim and I look like geniuses because in 2008, we had great advisors around us. We had great smart people. And we made frickin' fortunes on debt. In 2008, Kim and I borrowed $300 million. The average guy can't borrow $30,000, but $300 million to buy real estate that was crashing seemed like nuts. But today we look like geniuses. And the same thing is about to happen. So I'll say it again. Either you decide to get more educated and get educated by smarter people, or get out. But this is not a time to be in or out. You got to know at least you're committed to education, and that's what Rich Dad's World stands for. And we have Tom Wheelwright. He's been with us for 25 years, and he's seen the tsunamis come and go, the waves crash, waves ride. And it's because we have great tax guys like Tom that we have the courage to go in. What's that song? I go where wise men fear to tread. And so that's why we've got to have smarter people on your team. And Tom has seen Kim and I go in and out with Ken McElroy. I mean, we've bought, I think, $1 billion in debt now, because debt is real money since 1971. And guys like Dave Ramsey says, live debt-free. Well, for 99% of the people, you should live debt-free because you're stupid. You don't know anything about money. But debt is money. That happened in 1971. So welcome, Tom. And then we have Jason Hartman, who's a young guy in this thing. He understands it. He's smart enough to be living in Florida. Yeah. And anybody who supports higher taxes is a Marxist. And when I tell people we don't pay taxes, they think I'm a criminal. No, I'm a capitalist. Yeah. You want to be a Marxist? Pay taxes, idiots. I mean, give me a break. Marx was the guy that said You want to kill capitalism? It's higher income taxes and inflation. And that's what they're doing. Lower taxes are good for capitalists. You know, lower interest rates are good for capitalists. Only idiots have credit card debt because they went to school. If you understand it that macro, then maybe you can smell the coffee and wake up and get some education. So we have Rich Dad's World. I love those guys because they promote the philosophy, the theory of capitalism, not Marxism. If you can get it that way, you'll understand. If you got to look at this picture from the macro point of view, wake up right now. So that's why Rich Dad's World, we're going to offer you more opportunities to get educated, have a coach. I have coaches. Kim and I have coaches. We have coaches for our health, our wealth, and our happiness, because health, wealth, and happiness are important to us. So we have coaches for that. And I say this, the idiots out there are saving money. They want to save money. And frickin' Biden just printed another $1 trillion something, and you're trying to save it? Are you nuts? Are you frickin' nuts? Why are you saving money when they're printing it? Why are you working hard when they're raising taxes on it?
On top of that, Robert, so the only people who get taxed are the savers. They're the savers and the consumers. You're only taxed on what you save or consume. Anything that you invest back into hard assets, you get a deduction for, you don't pay tax on. So, I mean, it's so contrary with the whole message out there where you need to save, put it in the stock market. You don't get a deduction for putting money in the stock market because that's not a hard asset. That doesn't actually build real wealth. All that does is pump up Wall Street.
So let me explain one more macro change that's coming in that's going to cause huge problems. Now, huge problems means huge opportunities. I'm afraid we're going into the biggest stock market crash in history. So that's why we have Andy Tanner and guys like John McGregor as our coaches, because you make more money when markets crash. It's counterintuitive. Like when the real estate market crashed in 2008, Kim and I went back in, but most people run. It's going to affect everything we do. And people are still sitting around saying, oh, real estate always goes up. Oh, my house went up in value. Oh, I'm going to save more money. Oh, I'm going back to college, get my master's degree, maybe become a doctor. Tom, who pays the highest taxes?
Doctors.
So Jason,
the first time I ever played the Cashflow game, Kim and Robert, I got to tell you this, I was the doctor. That was my role the first time I ever played it, and I thought I would win because doctors make money, right? But they don't keep much of it.
Not only is it tax free, but all those deductions you get from investing in hard assets, you're just compounding your tax benefits because you're using the bank's money. The bank doesn't get the deductions for depreciation or intangible drilling costs or anything else. They don't get any deductions. What they do is they give you the money and you can use their money to get deductions against your income. So you're compounding